Good morning, everyone. Thank you for coming to Brown China Summit. Now we're going to start our second panel. And today we're honored to have our speakers, Professor Weiping Wu, Director of Urban Planning Programs at Columbia Graduate School of Architecture, Planning and Preservation, Professor John Yasuda, Assistant Professor of Political Science at Johns Hopkins University, Professor Yue Ho, Janice and Julian Bers Assistant Professor in the Social Sciences at the University of Pennsylvania, and Professor Peijun Duan, Senior Fellow at Harvard Kennedy School and creator of China's current dual engine economic strategy. So first up, we're going to have Professor Weiping Wu to present on the urban planning programs in China and how that's going to affect China's political economy. Thank you.
Thank you. Thank you, Hao-Tian, and thank you, everyone. I was hoping that Professor Duan will lay out the large framework so it'll be easier for me to talk about urbanization, but let's do what we have to do. Really glad to see the kind of interest here with students about China and on China. So urbanization, many of you probably have experienced it. You probably have lived in cities, many of you, right? It is essentially a process through which either people move to cities or places we call urban, or places change from rural agricultural types of nature and lifestyles to urban lifestyle and activities. So I was thinking that we can talk about how and where China is in terms of that process, and then how that may play out down the road, especially given pandemic and the economic slowdown globally. And then look at some of the challenges or what we call transitions that Chinese cities are facing or China is facing. So hence my use of China urbanizing. It's still in the process, right? It really hasn't completed that. And really quickly to capture that urbanization absolutely started with reform, right? And urbanization was going on before, but in about 1980, only about 20% of people in China lived in the so-called urban areas. So since then, urbanization has taken off, especially has taken off because of economic growth, right? So economic expansion, global engagement are all important driving forces of urbanization. Urbanization also has happened in China with societal transition, right? China has become an industrial or even post-industrial society from an agrarian society. And then since 1983, roughly, many people, 250 to 300 million people have moved from rural areas to cities. Either you could say permanently, temporarily, however you want to term it, but they are moving. So this kind of population mobility has been unprecedented in China. And that obviously has propelled the process of urbanization. And last but not least, that transition is modernization, right? We know in this process, many people have been lifted out of poverty, have transitioned, from, I just said, rural lifestyle and into an urban. More importantly, China's urbanization has been happening with what we call the state, or the public sector that is very much pro-growth, pro-development, and has a strong role in shaping the path of development. So we call it developmental state. So urbanization has been guided by many public sector policies, as well as the significantly increased autonomy by local governments. That's what we call the fiscal decentralization. That is, local government authorities have had significantly more control over a number of initiatives, especially in terms of urbanization. Of course, we'll see there are some challenges as well. So really quickly, I don't have good numbers for 2020 across all of the indicators. Hence, I'm just showing you in the 30 years since 1980. how urbanization had proceeded. As you could see, the percentage of urbanization, meaning the percentage population living in urban areas, had increased dramatically. Today, it's about 64-65%. So since 2010, it has even grown quite a bit. As you can also see, the number of cities, especially in the eastern region, and large cities really have grown. The challenge with data is actually in terms of how to define size of city, and that has changed multiple times. And in fact, even the definition of what constitutes a city, what is an urban area, also have changed over the last few decades, number of times. So studying urbanization in China has that intrinsic challenge, much as studying anything about China, because changes are so rapid and so large in scope. As you can see now that many large cities are around the East Coast, as you point to, right? I don't think it works. Anyway, on the East Coast and also along the Yangtze River. So you can see Chongqing, Wuhan, and Chengdu along the Yangtze River. Otherwise, it's mostly on the East Coast. It's very much echoing the population distribution across geography in China. So many of you probably have studied Chinese geography. If you look at the physical size, it's actually very similar to the United States. If you draw an imaginary line from the top east, northeast to the bottom southwest, about 40% of the territory is to the east of the line, 60% to the west, but 95% live to the east of that imaginary line. So it's a very different kind of geography of population distribution. Thank you. And so as we can see that China has proceeded to rapidly urbanizing, but people are asking, well, with the economic slowdown, with the COVID, because with COVID, we also have seen some a reverse migration, meaning people going back to the rural areas from cities. Will China continue to urbanize? The worldwide experience shows that most countries essentially urbanization rate tapers off when they reach about 80%, 75%. So there's quite a bit of space for China to continue to urbanize. So this is China compared to US, as you can see. And as you also can see, so I very beginning give you the quick definition of urbanization. So migration, right? As you can see in the 3-5 periods of time that where we have data, Professor Cindy Fan at UCLA had really tracked how migration has changed. And you can see the most recent 5 years, actually there's a significant amount of migration and certainly continue to the East Coast. And just give you a quick example, my own work, we've tracked, especially the 2 largest cities, Beijing and Shanghai, in terms of the percentage of local population that are migrants, right? Obviously, only in 2000 did the census, population census begin to account for migrants. So before that, it was not quite as accurate. So I want to draw your attention to the percentage of migrants in those cities now amounting to close to 40%. So it's a very significant part of the population. And many of the migrants, so obviously migrants have been diversifying, meaning there are some who do very well, there are some who do not do very well. So in this work, this is very recent, one of the books we have just published in an edited volume called China Urbanizing. Then my colleague, Professor Qin Gao, has looked at absolute poverty in cities, meaning by measuring, people have $1 a day, $2 a day, or some more globally popular or common measures. And absolutely, urban poverty has been decreasing over time, no matter what indicator you use. Absolutely, right? And that includes a lot of them are migrants. But if you look at the what we call relative poverty, that is in comparison, right? In terms of how much people on the top make compared to people on the bottom, and doesn't matter which indicator you use, there is clear evidence that relative poverty has increased. And so migrants actually make up a very large proportion of the urban poor. Then I wanted to also bring you to the second dimension of migration. That is what we call in situ. In situ meaning many places on top of people moving to urban areas also began to change from rural uses to urban uses. So these two lines show you, also in this book, my colleagues have shown that the rate of growth of urban population is actually, or has actually been slower than the rate of growth of the physical areas of urban places, or what we call land expansion, right? So this is actually work by the World Bank around the early 2010s, and with data on many cities, about 600 or so in China, between 2000 and 2010, it recorded how many cities have actually seen more land growth or higher land growth than population growth. So more than half of the 600 cities in China have done that, right? But rest of East Asian countries, that's not the case. In most places, it's the population that's growing faster than the land. So, you know, if you can recall your geography knowledge or what I just said briefly early on, in that China's land is similar to US, but population is about 5 times more, as you would think. We have denser cities, right? But so this is a little bit counterintuitive that cities are not as dense or haven't grown as dense. So this is Nanjing, city of Nanjing, capital city of Jiangsu province, just north of Shanghai. And in my own work, we looked at how the physical imprint of the city has changed, expanded over 25 or 20 years of time. And really the population size hasn't grown significantly, especially if you included migrants to start with, but the land or the ecological imprints have really expanded, not only geographically outward, but also in a more fragmented and what we call spiral fashion. And this is the kind of examples you will see on the ground, that super blocks, very large, and neighborhoods becoming less walkable, streets are much wider, taking up sort of very difficult for pedestrians to maneuver. So in the interest of time, I want to move on. So in a way that Chinese cities are rapidly urbanizing. So just want to give back to you, so this sort of imagery of new Chinese cities, especially new areas of Chinese cities. And so some cities are growing very rapidly and taking on a type of characteristic that is very close to cities in richer countries. That is, they have more environmental impact and larger ecological imprints. However, there are also cities, especially the smaller third and fourth tier cities, that are still kind of very much like poor developing cities. Their environmental issues are more local and less serious. So you can see in this chart, again in the book, Professor Pei Fan has tracked about 8 cities in terms of the different types of air pollution, and the levels are just all over the place, right? You don't really see a pattern in which so that they converge, and some cities are doing better than others in terms of environmental pollution or air pollution. So she's arguing essentially that Chinese cities in general or together are going through an environmental transition, meaning some cities are more locally with local effect, and others more with a larger regional impact. And this is again also the case with another indicator of environmental or air pollution. PM2 is mostly particulate hanging in the air. So again, very much differentiated among different cities in there. And so last but not least, in this edited volume, my colleague who does environmental health work asks also to consider another challenge that's facing Chinese cities, or what we call urbanization in general for the country. That is how it might be a delay in terms of the kind of benefits of urbanization. So early on, I mentioned how urbanization has really lifted, has paralleled economic growth, has also paralleled the reduction of absolute poverty, has also generated lots of health and environmental benefits, although unevenly across geographies as well as across different populations. And so Remis's argument is that some particularly vulnerable populations like migrants and the poor, or majority of the migrants, their real benefits are not linearly correlated with the growth of the economy and urbanization. So their benefits may be postponed for another 2 or so decades. And he further argues that with climate change, because of the significant impact on certain cities, especially along the coast, or that can be influenced by sea level change, that the benefits that cities have gained through growth and through urbanization in the last few decades may be literally washed away and cause another type of delay that is very similar or analogous to this concept of development delay. So with that, I'd like to conclude. So this is the book that my colleagues and I have worked together, and if you have any interest and time, I will welcome you to check it out. So thank you very much.
Thank you, Professor Wu. Next up, we have Professor Peijun Duan. He is the Senior Fellow at Harvard Kennedy School, and he will be giving us a presentation on China's current economic strategy, the dual engine strategy, and how that affects China's current domestic politics and international politics. Thank you very much, Professor Duan.
Okay, you cover it. Okay, you can.
Okay. Oh.
Yeah. morning, everyone. It's my great pleasure to be here to discuss the two issues with you. One is about the research framework for China's economy, the dual energy strategy. It was purported when I was doing national key project in 2010. The reason for discussing today is that the dual engine has once again become the leading strategy framework for China economy since last year. If we analyze China's economy prospects, we need to understand it. Another issue is about China economy that may be interesting to you. I would like to talk about some recent idea, measures, and policy, and what might be expected around the dual engine framework. I want to talk about the first issue, the proposal, application, and implication of the dual energy strategy. In 2010, I had a speech on structural strategy and the future of the China at the opening session of the Harvard China Review, in which I proposed the idea of the dual engines. I used the dumper to indicate one end is the demand engine. The other end is the supply engine. Grasping it means implementing the dual engine strategy for the economy. In 2011, the paper comprehensively grasping the dual energy strategy was published in the Shanghai, Hong Kong economy. Then I had a speech on China dual energy strategy for development and reform and open up at the US-China Forum at Yale University. In 2012, my book, The China Structure Growth Strategy, was published, in which the fifth chapter is the dual engine strategy. My book. This is a new version, the Chinese version, new version. This is the original version, the English copy. What's the dual engine? Engine. The demand engine is to transform the growth model with the investment as the primary driver into another model with the consumption as the primary, and form a more reasonable structure of the consumption, investment, and export. It focuses on comparative advantages. The supply engine is to adjust the economic element structure to innovation-driven and the upgrading of the industrial structure. It focuses on the innovation advantage. The dual engine strategy focuses on the adjust the demand and supply structure with the other structure to promote China economy. How to promote? The demand engine is to improve demand structure to get new economic drivers, to expand the domestic demands for the efficiency and people's livelihood. The supply engine is to form a new factor structure with new technology for the innovation system and get a new industrial structure, new demand, and a new economic driver. The dual engine strategy also affects the efficiency, urban, rural, and regional structure. For example, the proposed regional strategy to transform the Yangtze River Delta, the Pearl River Delta, and the Beijing-Tianjin-Bohai Bay into an innovative economy for the innovation advantage, and shift the coastal industries to the central and the western regions for the comparative advantage. So, Guangdong, Hong Kong, Macau, Great Barrier, we can understand has three strategies: internationalization, innovation, and the regional system, three strategies. The first global barrier for Rome was held in 2020, and the second one is being prepared. The Forum is linked to the Harvard Research Project, Bay Area Development and Innovation. What's the relation between the demand engine and supply engine? While demand engine is particularly important for economic growth, employment, and economic stability. The innovation-driven supply engine is even more fundamental to the quality of the future economy, more powerful growth and international competitiveness. No, this one? Why?
Sure. This is just like for
Yeah.
like want to go like
This is PPT, original PPT.
this is the original.
I gave
That's what you were saying. Is there
this different copy, different version.
this is the original.
No.
Next one.
Okay. The background of the dual engine strategy, the background including the practical and academic. The dual engine strategy is a combination of the demand-driven and supply-driven from the economic perspective. A combination of the domestic positioning and global positioning from the global perspective. A combination of the development position in Eastern and Central China from the specific perspective, and the combination of the comparative advantage and the innovation advantage from the strategy perspective. The latter is a point of the contemporary grand strategy. About the application of the dual engine strategy, the 2015 and the 16, the China government work reports proposed that it is necessary to turn on the dual engine to create a new engine to promote innovation and improve a traditional engine, focus on the expanding the supply of the public goods and service. We must celebrate the innovation-driven strategy, transform national engine and build new engines. The 13th five-year plan proposed insist on demand and supply innovation, form an efficient cycle in which the demand and supply upgrading are coordinated to strengthen new driver of development. The recently 2022 Economic Work Conference, the Central Conference, promotes to combine the strategy of expanding domestic demand with deepening the supply side structural reform in view of the triple pressure of demand compression, supply shock, and weakening expectation on the economy. The demand engine has been valued, and the idea of the dual engine strategy has come to the forefront again. I want to talk about the second issue, the ideas, measures, and prospects of the China economy from the dual engine perspective. China's economy grew 3% last year. It's low. Lowest. Yes. Yeah. The proposed growth of 5.5 in 2023 at the end of last year. Last year proposed 5.5%. But recently, to about 5% the growth at the two conferences. From the ideas and the measures of this year's dual energy strategy, the general viewpoint is that this year should be a recovered growth. I think so. Only a recovered growth, but not fast growth. Why? From the demand side, imports and the exports increased by 7.7% in 2022, compared with the previous year, but began to decline recently, January and February. Of real estate, the three indicators fell last year. Investment fell by 10% year on year. Trading volume fell by 24%, and sales fell by 27%. From the supply side, the supply chains was interrupted due to the pandemic. With some social pressure and other factors, the operating income of the top 500 private enterprises increased by the 9.1% last year, but the total assets decreased by 17.9%. And the net profit after tax decreased by 12.3%, bridging the expectation weakening. Therefore, it's necessary to exert effort from both demand engine and the supply engine. About the recent idea and the measures from the demand engine, such as one is about consumption. Consumption growth is relatively optimistic. Society is gradually recovering from the epidemic with the rebound in restaurant, trips, and tourism. restaurants which originally top out at 5 trillion yuan of dollar, $5 trillion per year, is expected to be close to the pre-academic level. Some of the regular consumption is also expected to recover as the medical, health, and vocational education are liberalized. Liberalized policy, special policy, liberalized. Real estate is a little special. There are only 10 policies for real estate since 2021, including emphasize that real estate is the pillar industry, providing a new loan support and suspending the real estate tax pilot. But now, most cities are oversupply. Expect for Beijing, Shanghai, the biggest city. Providing new loan support and suspending. Yes, I see. The model of the high leverage, fast sales, and high turnover is difficult to continue. The regional real estate overall polling GDP grows about 20%, but this year may be a recovery, not close it. Someone said maybe 10%. That's good. Half of the investment is relatively certain. The second is investment. And the other half still has something to do deals. The first half about government investment may reach this year, may reach 20 trillion yuan this year, including the traditional infrastructure, information and technological innovation infrastructure, and focus on cities such as the Grand Bay Area, metropolis, provincial capitals, sub-provincial cities, and counties. Also. Rural construction and public health system all are on table. The enterprise investment focus on the manufacturing, including traditional manufacturing, emerging industries, and modern manufacturing. No problem with these directions, but problem is how to improve the expectations of private enterprises. Their confidence possibly needs some policies, operations, and times. The third, about imports and exports. They have been good for 6 years, but down 8.3% year on year from January and February this year. This year is not good. Also, Korea and Vietnam also down, maybe global demand possibly maybe head lower, headed or lower. This trade with international relation and certainly need to be studied. Ideas and measures from the supply engine, another side. The capital supply are bigger this year from the stock market. This year, stock in China, stock market is the key point, one of the key points. And central bank, the stock market will shift to the registration system from the audit system. It will be changed. The SEC is transformed into an agency directly under the State Council. Long-term funds will enter the stock market. The central bank mainly controls the quantity of the money issue and the pace of money issuance. It doesn't control the other it's changed. His function has been changed. Okay. Related to the capital supply and fiscal and monetary policy. Fiscal policy has been more active with the deficit rate going from the 2.8% last year to 3%. Monetary policy has become more accommodative with the M2 growing 12.9% in February this year, the highest since 2016. The supply, the science and technology innovation factors is concentrate in manufacture, semiconductor, CNC machine tools, biomedical and medical equipment, materials need to be improved. Solving the problem is not easy and needs time, as you know, so difficult. The institutional innovation measures adopted are for it. First, the Ministry of Science and Technology will be reorganized and its functions will shift to basic research, incentive policy, and financing for the technology industry. The second is the setup of the data bureau in the NRDC, NDRC, to coordinate the use of the data resource. The dual engine strategy requires a market economy and the rule of the law as the underlying conditions. This is need to allocate resource and create innovation capacity on the demand side with the spending money, or supply side of the forming products and service. This is the key moving from the restorative growth to long-term sustainable development. Thank you. Thank you. Okay, sorry.
All right, thank you. So how many minutes? 10 minutes. All right, so this is the express version of this lecture. So what is China's economic outlook of its global uncertainty? And I think given the current US-China tensions, the specter of global recession, and of course, more recently, the failures of a regional bank with global outreach, this question is quite apt. And so today I'd like to take a look at and consider this question from the vantage point of the Chinese stock market, which Professor Duan brought up towards the end of his lecture. Whether or not this institution is likely to serve as an engine of growth, or at least a bastion of stability during this relatively uncertain moment. Now, most people will speak to the arbitrariness of the Chinese stock market, that it itself is a site of deep uncertainty given the regulatory proclivities of the state. But today I'd like to argue that China's stock market governance is not incoherent, it is not inconsistent, and it is not entirely politically motivated. That being said, I wouldn't rush to put your money into A shares anytime soon. I think in the sort of general imagination of the public, this individual, and more specifically Jack Ma, and more specifically his fintech company, the Ant Group, comes to mind when you think about the Chinese stock market. Now, in late 2020, the world was getting ready for the Ant Group's listing to happen at the same time in Shanghai and Hong Kong, and it was going to be the world's biggest IPO at the time, at $34 billion US. Now, because Jack Ma has a habit of mouthing off at major financial conferences and making fun of regulators and their management of the financial system in China, unexpectedly in late 2020, Ant Financial's listing was canceled. Now, the politics are fairly obvious here, right? But beyond the story of Jack Ma, right? In general, most financial observers of the Chinese stock market, particularly in the financial press, have long commented on sort of the schizophrenic nature of stock market regulation. I mean, to one extent, right, China has actively sought to make Shanghai an international financial center. Regulators have gradually expanded the qualified foreign investor scheme. They've created new direct connects between Shanghai and Hong Kong, Shenzhen and Hong Kong. And then, of course, there have been a host of joint venture projects. And yes, this establishment of a new registration-based system, which would basically take controls out of the CSRC over the listing process, does seem to suggest that there is a moment of sort of market liberalization. But against this, of course, right, are the host of interventions by the CSRC involving the termination of listings, investigations of securities companies, price controls, and of course, the backtracking of many of the registration trials on numerous tech boards that have been recently established. So needless to say, the reactions from global capital and the financial press have been relatively scathing, with frequent interventions described as warping the market, bans on shorting, preventing fund managers from using a hedging tool against inflated markets, and frequent rule changes, leading one Financial Times commentator to assert that it is an arbitrary system where the rules can and do change overnight. Now, most explanations on the Chinese stock market really do feed into this conception of the market governance framework being relatively arbitrary, right? So ideas really focus on the regulators' emphasis on notions of fleet-footed capital. Will say, well, the CSRC will change its regulatory positions given the attitudes towards foreign investment as capitals flow in and outside of China. The state-business relationship angle really highlights the fact that, yes, perhaps regulatory decisions are made on the basis of political patronage networks, which also feeds into the story of the stock market governance system is fairly turbulent. So if you're friends with Zhou Yongkang, that's great under one period, but following the anti-corruption campaign, good luck, right? Tech used to be the darling, of course, of the party for a while, but after 2019, good luck, right? And then, of course, the third sort of argument, of course, is that, well, at the end of the day, stock market governance decisions are really driven by some notion of developmentalism, right? Industrial policies. And so you really should see that the regulatory decisions, the prioritization of certain listings go in line with prevailing industrial policies. But then this in and of itself also speaks to frequent changes in terms of regulatory rules as the various sort of priorities of the developmental state shifts. Now, so I enter into this debate in a recent article in Comparative Political Studies and say, actually, there is much more consistency to this system by looking at the undergirding regulatory philosophy of the CSRC. I think what's quite clear in field work that I did from 2015 to 2019 is that in the imagination of the Chinese Security Regulatory Commission, right, is a particular type of investor, a particular modal investor that is fundamentally irrational, right? Retail investors in China drive nearly 80% of market turnover, which is a huge and outlier status as far as sort of retail participation in the market. They're characterized as momentum traders. They prefer thematic stocks versus investing in fundamentals. And of course, they have notoriously short investment horizons, right? And a low financial literacy. So this is the modal investor that the regulator is trying to manage as they're dealing through sort of the turbulence that they observe in the market. Now, you know, in interviews with senior CSRC officials that I conducted pre-pandemic, you can see this sort of thinking clearly in some of these statements here, right? But the idea being that ultimately it is the regulator's role to manage the irrationality of this base. I think one of the more interesting stories that was presented to me was the Obama and Trump effect on the stock market. Now, in 2008, when Obama became president, one of the things that became very clear to a number of the regulators was that any company following the election that sounded like Obama's transliterated Chinese name, Obama, went up. It didn't matter if it had anything to do with US-China trade relations or anything of that sort. Alkema, a cold storage company, went up 8%. Alma Dianqi went up about, I think, somewhere around 6%, right? And the same thing happened again during the when Trump was elected president in 2016. All of a sudden, you saw anything with Duan in it go up. Anything that sounded like Xilali or Hillary went down, right? And so the CSRC regulators, right, were very clear to me that this is their problem, right? That this is the primary issue that they have to deal with in terms of managing the stock market, right? Which is why you see a host of hard paternalist tools. For foreign capital, for a number of other securities regulators, these sorts of tools appear fairly arbitrary and politically motivated. And don't get me wrong, read the article, I talk about it at length about why they might be. But it is important to realize that a merit-based review, price limits on trading, the T+1 rule, indefinite bans on shorting and sectoral bans, and a positive list system for financial innovation. And of course, you have the national team, right? When everything goes south, you can always depend on a nice group of state-led financial vehicles to enter into the market to keep things afloat and to stop a rout. Much of this also can be tied to this idea of a modal investor that is fundamentally irrational, that is skittish, that doesn't know where to put their money, so the regulator has to step in. So you can see that there's quite a distinct regulatory philosophy that actually emerges within this sort of state capitalist context. And I put it in quotes because I think the vast majority of political economy scholars here in the United States don't know exactly what to call the Chinese political economy anymore. But as far as financial regulation is concerned, you could see that there is an idealized irrational investor. There's also, and because you don't have rational investors, notions of an efficient clearing market as dictated by the efficient capital market hypothesis doesn't quite jive, right? Which means that the only actor that can step in is the state through hard paternalism by constraining investor choice, right? Now, by contrast, in the liberal market economies, right, we have the belief of a reasonable investor. This is a hypothetical individual that was established by the Supreme Court here and is now basically enshrined in SEC regulation. Whether or not the reasonable investor exists is irrelevant as a matter of law. Anybody who's been following the Reddit or meme craze will definitely challenge this contention, as do many people in behavioral finance, right? And then underlining this is this efficient capital market hypothesis and a belief in soft paternalism, right? The idea that you don't constrain investor choice, you basically nudge investors to make better choices on their behalf. So you do see this alternative conception in China, but it's a consistent one, right? It underlines the regulatory system, right? Now, Professor Duan brings up the sort of new registration trial system. And this happened while I was still in China conducting research. It took a number of people, even at the CSRC, by surprise. We can talk about that and Qinggang's sort of relationship to that whole debacle during the Q&A. But the STAR market was supposed to be this new sort of epoch making a board on China, because it would establish a registration system, which means the approval system, which was quite tedious, would be put to the exchange itself, and the regulator would get out of the business of sort of vetting the company, right? The profit requirements were moved. Price movements in terms of the stocks were expanded from 10% on the main boards to 20% on this new board. Now, what's interesting here is that when I dug deeper and I began to ask individuals within the regulatory establishment of what this would mean for the system, they said, one, that US practitioners fundamentally misunderstand what a registration system actually means in China. One, he said, look, the main issue here is that can a process of asking for more information really address the fraud and manipulation in the market? He continues, this isn't like applying for a marriage license. We will still ask the questions. Now, initially, the board did quite well. But by 2020, the regulator had stepped in again to ask whether or not companies had viable business operations. And of course, through 2021, you saw a host of companies that were in the queue that were already approved. All of a sudden, their listings were suspended, right? So this registration system might be an idealized point in the future, but it certainly is not now, right? So I suppose highlighting all of this, right, is to say that perhaps in a moment of uncertainty, at least we can turn to the regulators' sort of underlying philosophy to at least understand how some of their policies are consistent with their view of the market. But I think for those, foreign investors and for individuals attached to foreign capital, I think any notion that China is moving to a free, standardized, and global market in Shanghai is unlikely. I think Hong Kong is still going to be the primary global venue for Chinese capital raising. China's status as an international financial center, I think, is still well into the future. And of course, much of this is tied to overall discussions of the continuation of financial repression. So I leave these more as a point of discussion and debate, but thank you for your time.
Next up, we have Professor Yue Hou. She'll be connecting through Zoom very shortly. Could you hear us, Professor? We cannot hear you. You probably muted. Sorry.
Okay, sorry. Yes. How about now?
Perfect.
Awesome. I do have some slides. I think somebody need to enable my screen share.
Okay.
1 second. Let me make sure I have that set up right for me.
You're all set. Okay. You're
Awesome. Okay. I think we're running out of time, so I will try to also finish in 10 minutes. Thanks everyone for having me here. My name is Yue Hou, and I am assistant professor at Penn, and this year I'm at Stanford. Sorry, I couldn't join you in person. So today I'm going to briefly comment on the private sector in the midst of global and added domestic uncertainty. I do think global uncertainty is big, but China also has a lot of domestic, I guess, concerns. So to look at the private sector and private entrepreneurs, I would like to take the audience back to last century to look at the earlier relationship between, the red capitalists and the earlier years of the Chinese Communist Party. During the earlier years of the CCP, we actually know there are a lot of red capitalists who are very close to the Chinese Communist Party, right? On the left-hand side, we have Rong Yiren, which is a household name in China. And his family was the wealthiest family before 1956. And I'm going to talk about what happened in 1956. He ran, he was dominating the flour and cotton milling business in China. And, he was very close to the CCP, later served as the vice mayor of Shanghai, and later he became the vice president of China. On the right-hand side, we have another very famous entrepreneur, Liu Hongsheng. He was actually the second richest family after Rome by 1956. And he was, dubbed as the king of matches, king of wool, and he served later as 人大 delegates and 政协委员. So, where we see that there's this close relationship between those capitalists and the CCP. Then what happened in 1956 was this private, public-private partnership conversion. In Chinese, it's called 公私合营. And maybe some of you in the audience may recognize the guy on the left, Le Songsheng. His family owned Hongrentang in Beijing. And this is what happened in 1956, right? He handed this big envelope to Mao and to Zhou Enlai to celebrate the success of the 公私合营. So basically, a lot of the private businesses were nationalized. So that's what happened in the earlier years of the new republic. So we know what happened between 1956 and until Mao's death in the late 1970s. So moving on to the 70s to the 80s, that's actually the earlier form of China's private businesses, right? So the TVEs are 乡镇企业. They're the earlier form of private development again in the business sector. So we have those factories where factory workers are making commodities. And in the 1980s, we also see villages like Huaxicun. There you have a different business model where it's like a whole village producing factory goods together. Here we see in one village we have 10 plus textile and steel aluminum factories in the village. And, the vast majority of villagers work in factories. And this is a very modernized, development in China in the 80s. I haven't been to Huaxi village, but I think they're still doing very well. In the 90s, the entrepreneurs are experiencing a period where people call it 野蛮生长. So there are a lot of legendary figures who went in and out of prisons, right? On the left-hand side, I think the audience here are too young to know those names, and there were actually quite household names as well. On the left-hand side, we have Chu Shijian. He was called the king of tobacco, and he famously turned a local factory into a profitable SOE in the western part of China. And in the late 1990s, he was sentenced for taking bribes. And later on, he got released from prison and he started another big business. And I think he was growing oranges in Western China. And he was doing pretty well, and he passed away. And on the right-hand side, we have another legendary guy. His name is Mo Qizhong. He was called China's Barter, 中国倒爷. He was once the richest man of China. And he had a lot of interesting story. Again, for the audience, if you you're curious about what's going on, I think those stories are fascinating. Okay, so he once traded 4 Russian Tu-154 airplane with 500 railroad cars of consumer goods. So that was really a period when China had a lot of needs for just regular consumer goods, and he had a way to do this kind of interesting trades. And in the 2000s, he was sentenced for bank fraud, and he served jail for many years. And he's still alive and he's still in business. And I think if any of you watch Xu Zhiyuan's interview, he actually went on one of the shows to talk about his recent businesses. So I'm going to come back to those guys. Now we're talking about China 2023, but I think those stories will become relevant again. So moving on a little bit about the Hu Wen administration. Right before she took power, there we do see many top private firms either founded during this period or they grew big and international. So a lot of the companies that we heard, Tencent, Alibaba, Baidu, those companies, a lot of them really started or really grew big during this period. And there were 2 famous policies, the old 36and the new 36, 新36条, during this period were policies by the national leader that supported the private sector and private capital, also indigenous innovation, industrial upgrading, and other policies that are very conducive to business growth. Okay, but in the same time, in 2008, maybe some of you were born already, there were a very big financial crisis, right? Global financial crisis, which also impacted China. Then the national administration issued a 4 trillion stimulus package, and that was really the point when people started to talk about 国进民退, right? The retreat of the private sector, because a lot of the stimulus money went to the SOE sector. So that's really when people also started to worry about the role of the state versus the role of the private capital. Moving on to the current period, the Xi era starting in 2013. And, I'm a political scientist, so I do pay attention to a lot of the party meetings and, the NPC Congress meetings. So one important plenum of the party Congress, 18大的三中全会. Okay, so there in the meeting, it is stated that the market has a decisive role in the allocation of resources. Okay, so that's a really different departure from the previous language, which is the basic role. So 决定性作用 of the market, people believe that, okay, so maybe the market is going to have an even bigger role, right? But in the same conference, the party also stated that party, government, military, civilian, and academic, east, west, south, north, and center, the party leads everything. Okay, 东西南北中，党领导一切. So also that gives people some, compared to the first, the first line, the second line gives people some doubts about the role of the party. So is it really the market? Is it really the party? Is the state striking back? So that's the question that people has been wondering since 2013. So I do have some graphs to show that the private sector actually continued to grow since 2013. Okay, since she took power. The latest data I have is 2018. Okay, so we do see a steady growth of the private sector. First, in terms of companies that are listed in the Chinese stock market, so the number continued to go up. And we also see, continued employment of the private sector in terms of employing, labor force in China. So also very constant, steady growth until 2018. In terms of research and development, we all probably know that the private sector is the driving force behind China's innovation. And no matter how you measure it, we also see a very strong, robust growth of the private sector in contributing to R&D project, new products, and number of inventions in China. And now the number is between 75 to 80% of all innovation are coming from the private sector in China. Okay, that's also until 2018. Finally, in terms of tax revenue, we also see a big increase in terms of the private sector's contribution to China's tax base. Okay, and we do see a decline of the state sector. So I'll end on a few points on the challenges facing the private sector. So the data I have is until 2018, and we all know what happened in 2019 and ongoing, the 3 years of the pandemic. Let me skip this one. A little bit on the trade war, on the tech sector, the trade war started around 2018, and I think it's still ongoing. So on the tech sector, it really hit big, right? So the national security concern in the Western countries are real. There's huge distrust of Chinese tech companies' independence from the party. It really hurts Chinese companies' expansion abroad. And right now, as we speak, TikTok is facing huge trouble in terms of, a potential ban by the Biden administration, and Huawei, we know, it's pretty much over in America and in a lot of the Western countries. So I wanted to focus on the perception of party control, right? So we do not have much evidence of the party control in those sectors, but really it's the perception of people saying that, when the party needs the cooperation of those tech companies, they have to comply. So we still need to see more evidence of that. On the other hand, I think a few other panelists have talked about US-China trade, but when you look at the data, there's still, steady, very robust trade between US and China. If you look at last year's number, US-China goods trade hit a record high of almost $700 billion in 2022. So that's actually the highest number in recent years, okay? But that said, I do want to emphasize that MNCs in China, they're definitely diversifying, okay? They're already moving to Southeast Asia, South Asia, and that is definitely a worry that the Chinese private sector should have. So in the past 3 years, I don't think our panel has talked a lot about, what's going on. And I really encourage you to listen to this Ezra Klein show, which just aired a few days ago. It says how China went from economic superstar to faltering giant. So Ezra Klein, he's not a China specialist, but he, I think, identified a lot of real problems in China. Okay, so he mentioned there was the real estate bubble that's popped. Zero COVID policy turned, in his words, pathological, and many foreign companies like Apple, they try to diversify and relocate, and there's the US hawkish policy towards China, okay? So besides all this potential problem that he identified, the discussion also talked about the online education sector. There was DD, there was Ant Financial, which John Yasuda just talked about in depth. There's the gaming sector problem. There is this new push for common prosperity. There was the Shanghai lockdown. There's China's position on Russia. So I do think that there are a lot of potential worries that the economy has witnessed in the past 3 years up until now. So, so to look back at private entrepreneurs' fate in the 50s, in the 90s, and now a lot of people do worry about, about those billionaires in China, multimillionaires in China. What's their fate, right? Then we do have seen a lot of news report that look at, 中国富豪出走潮. We do see a lot of rich Chinese business people, they're leaving the country, right? And there's a meme, once in a while, people ask, where is Jack Ma, right? Where's Ma Yun? And people try to spot him everywhere else but China. So that's definitely a concern that, to boost the economy, to revive the economy after COVID, we do need to see those entrepreneurs make investment in China again. So I'll end on this note. There's a new premier. He just had his first press conference this past week. So I wanted to focus on his speech on the role of entrepreneurs, right? So he said businesses of all forms of ownership will be treated equally, protecting the property rights and interests of entrepreneur according to the law, encouraging fair competition between business entities of all types. So there we do see some hope that Premier Li Qiang, he's gonna promote all businesses of all forms, including private and state, right? And he also emphasizes on the opening up to the outside world is our fundamental national policy. Okay, so we'll see how his policy goes, but I think that's a good place to end. Thank you very much. And I do have a book that look at the private sector all the way until 2019. So if you're interested, I think it's on Amazon and all the other channels.
Thank you everyone for coming. And I would like to express my greatest gratitude to all of our speakers for coming to our political economy panel. Thank you, Professor Duan, Professor Wu, Professor Yasuda, and of course, Professor Ho. And please stay tuned for more panels today and tomorrow at Brown China Summit. Thank you again for coming.